Yo, what's up everyone? Welcome back. Patrick here. Moving on to the next example. We're given all of this information over here. Now, as usual, this example is written out in the lecture notes. If you don't want to write all of this out, you could take the lecture notes, print them out. This will be already written out for you. So what we're told is that ABC Incorporated produced 2,000 units of a product during 2016. Each unit sells for $800 each. They had 400 units in finished goods on January 1st, 2016, and then 600 units on December 31st, 2016. In addition, you've been given the following information. So we're given this information over here, and then this information over here. Now, just as a heads up, this WIP, this is work in process, right? On January 1st and then December 31st. So the beginning work in process, ending work in process for that 2016 period. And then this FG here represents finished goods on January 1st. So the beginning finished goods of 180,000 and then the ending finished goods on December 31st of 210,000. So given all of this information, we got to answer these three questions. We have to prepare a statement of cost of goods manufactured in 2016. Then we have to find the average cost of producing one unit in 2016. And then for number 3, we have to prepare an income statement for 2016. And so where I'm actually going to answer these is over here in this space. So I'm actually going to erase all of this. Now for number 1, we're actually going to have to use this 120,000 and then this 150,000. If you remember, the beginning and ending work in process was in the statement of cost of goods manufactured. But then this other information we're actually not going to have to use until number 3. So let's remember these figures, 120,000 and 150,000. I'm going to erase all of this here. And I'm going to start off making that statement of cost of goods manufactured in this space here. So to put in a proper format, let's put the proper titles. So we have ABC Incorporated. This is going to be a statement of cost of goods manufactured. And remember, a statement of cost of goods manufactured, similar to the income statements, for a period of time. And in this case, we're going to be doing it for the period of 2016. So you could put year ended for 2016. I'm going to put 4 year of 2016. Sometimes you'll see me writing different things here. Just want to give a heads up that depending on your prof, depending on your textbook, you might see different formats of this line over here. Right, so 4 year of 2016, that's what we're going to be making this statement for. Now, with the statement of cost of goods manufactured, what do we start with first? We start with the direct materials. And what we need is we need the direct materials used. So if you remember that first line in the manufacturing flowchart, we actually rearranged that to get that direct materials used. The way we do that is we start off getting the beginning raw materials, which was on January 1st. So we're going to have raw materials. Over here, I'm going to put, you know what? Give myself some more room. I'm going to put it here, raw materials. And I'm going to put a BEG representing beginning. So we have the raw materials at the beginning of the period, which is 50,000. You could also put the date here if you want, January 1st. Now, what we do is we have raw materials at the beginning of the period, then we're going to have some purchases, so we're going to add those. So how many purchases were there of raw material? We're given 260,000. So we're going to have 260,000 over here. We're going to be adding that. Now, in the flow chart, usually we subtract the direct materials used, but in this case, we're solving for the direct materials used. So basically, we got to bring over that ending raw material. So we're going to be subtracting that. So we're going to subtract the raw materials at the end of the period. And that's going to be $80,000. Okay, and we're going to be subtracting that. And then when we net all of this out, what we're going to get is what we need, which is the direct materials used. All right, and then this number here, whatever this nets out, I'm going to put this over here. So we're going to have 50,000 plus 260,000, which gives us 310,000, minus 80,000 would give us 230,000. So that's going to go right there. That's the direct materials used. That's the important number that we need for this statement. So we're done with the direct materials. Now what we need, the next line is going to be the direct labor. And then notice that that is given to us as well. So the direct labor is 400,000. So that's going to go here. The next line is manufacturing overhead. Now, what I'm going to do just to save some space here is I'm actually going to just put the total figure over here. But out of everything that we're given here, so what have we used? We've used this so far. We've used this so far. This. Out of these remaining figures here, what's the manufacturing overhead going to be? Well, it's going to be anything, any expenses, any costs dealing with the factory where you're manufacturing the product. So that's going to be indirect labor. That's going to be the rent for the factory. That's going to be the depreciation on the factory. That's going to be the utilities of the factory. And then sales manager, sales commission, that's not expenses or costs incurred in the factory. So these here are periodic costs or periodic expenses. They're actually going to go on the income statement, right? So we're going to come back to these in number 3. But these 4 items over here is going to be manufacturing overhead. So usually in a statement of cost of goods manufactured, you'll see these items listed under here, sort of like we were doing over here. It's almost like side work that's in the statement. You list them out and then you add them and get this number at the end. But just to save some space here, what I'm going to do is I'm just going to add them from here. So basically 70,000 plus 60,000 plus 30,000 plus 15,000. If you add all of those up, you would end up getting 175,000 over here. Okay, and then over here, basically all of this is going to be the total manufacturing costs. Right, when you add up all of those numbers. So what would you get when you add them up? You would get 630,000 plus 175,000, which would give us what? That would be 805,000. Like that. So that's the total manufacturing cost. Now from here, what we want to do is we add to those total manufacturing costs the work in process at the beginning of the period, or in this case, January 1st. And if you remember, that work in process figure that was there on January 1st was 120,000. And remember, we're trying to get that cost of goods manufactured. So what we got to do is we got to subtract. If we rearrange that second line on that manufacturing flow chart, we end up getting that work in process, or subtracting that work in process at the end of the period, or December 31st, which was 150,000, right? And we're subtracting this number here, so I'll just put it in brackets so you could see it more clearly. And then when we net out all of this over here, we're going to get that cost of goods manufactured. So that's going to be the final line on this statement. This is pretty much what we were looking for. And so when you net out all of these, 805,000 plus 120,000 gives us 925,000, minus 150,000 would give us 775,000. And so that there ends up being your cost of goods manufactured for 2016. Now, number 2, this was number 1. Now, number 2, they were asking for the average cost of producing 1 unit in 2016. And basically, the way you get that number is you take this cost of goods manufactured. I'll write out the general formula for you first. Manufactured. And you divide it by the number of units that were produced. Okay, so what were the number of units produced? We're actually given that information at the beginning of the problem. So we're told that there was 2,000 units produced of a product during 2016. So what we do is we take that number that we got, that 775,000, and we divide it by that 2,000. And when you do that, you would end up getting $387.50. So that's the answer for number 2. That's the average cost of producing 1 unit in 2016. And what's left to do now is to prepare that income statement in number 3. So I actually wrote out the remaining information that we're going to need to prepare that income statement. So we have the cost of goods manufactured that we calculated in number 1. We have the sales manager salary, sales commission, general admin. Those are the period costs. They're going to go on the income statement. Then we have the finished goods at the beginning and end of the period. We're going to need those numbers and that cost of goods manufactured to calculate the cost of goods sold. That's going to go on the income statement. So to prepare this income statement, let's put the title of the company here. So we have ABC Incorporated. This is going to be an income statement. And this is going to be for year 2016. So the first line on an income statement is the sales or the revenue. But notice in this case, we actually don't have enough information yet to get the sales. We weren't given this number, right? Sometimes this dollar number will be given as a total, which is nice. You could just put it in there. But in this case, we're not given this number. We're told that each unit sells for $800, which is nice, but we actually aren't given the number of units sold. We're given the number of units produced, and then we're given the number of units in finished goods at the beginning and end of the period, but we're not given the number of units sold. So we're actually going to have to calculate that first. Okay, so as I mentioned this in a previous example, the lines on the manufacturing flow chart, they can be in dollar terms. Usually, most cases, we're going to be dealing with dollar terms when using that flow chart, but you could also look at it in terms of the number of units. And this is an example of where we're going to have to do that. And we're going to have to look at that finished goods inventory line. So if you remember, we had the beginning finished goods plus the cost of goods manufactured, and then we had minus the cost of goods sold, and then we had the ending finished goods. So if we look at this in terms of the number of units, well, we're told that there are 400 units in finished goods on January 1st, 2016. So that's the beginning finished goods. So we're going to have 400 units here. We're told there are 2,000 units produced. And then we're not told how many units are sold. So we're actually going to solve for that. So this cost of goods sold, in this case, is going to be the number of units that are going to be sold. And then we're going to have that ending finished goods, which is 600 units. So if we bring this over, we would end up having 2,400 minus 600, which would give us 1,800. So this here represents the units sold, right? There's 1,800 units sold in 2016. We had to calculate that on the side. And so now we can get the sales number because it's just basically how much each unit sells for, which is $800, times the number of units sold, which is 1,800, right? And then when we multiply these numbers, we would end up getting 1,440,000, like that. All right, so that was one of the tricks of this question, is we had to figure out that number. And then we use that number to figure out what the sales is, that first line on the income statement. Second line on the income statement is the cost of goods sold, which we're going to subtract. Again, a number that's not given to us. And in fact, we're actually going to use that same line here from the manufacturing flow chart, but we're going to now deal with it in dollar terms, not in terms of number of units. So in dollar terms, the beginning finished goods was 180,000. And then we had that cost of goods manufactured, which was 775,000. We calculated that. We're calculating the cost of goods sold. That's what we're solving for now. And then we have that ending finished goods of 210,000. And now we got to solve for this x, which is going to be the cost of goods sold in this case. Okay, so we bring this over when we net everything out, 180K plus 775K minus 210K. That would end up giving us 745,000. Like that. So this here is the cost of goods sold. Another calculation we have to do on the side to get the number on the income statement, like that. And then from here, everything is going to be pretty smooth. So we're going to get the gross margin, right? Sales minus cost of goods sold. And then when we subtract these over here, we would end up getting 695,000, I believe. Yeah. Right? 695,000 is the gross margin. And then we have to subtract the period costs from that. So the period cost in this case is the sales manager's salary. So let's write that here. So we have sales, I'll write it here, sales manager salary. So we're going to subtract that. That's going to be 90,000. Then we're going to have the sales commission, another period cost. So we're going to subtract that. That's going to be 180,000. And then we're going to subtract that general admin, which in this case is 220,000. Like that. So these here, they add up to 490,000. That's the total period costs. And then 695,000 minus 490,000. That would give us, sometimes you'll see here net income. Sometimes you'll see operating income. I'll put operating income just because net income is like, includes taxes and all that. So the final line on the income statement, in this case, with this information we're given, is 205,000. Whether that's net income, whether that's what your textbook labels it, or operating income, either way, the final line for this example is 205,000. Right? So that there is the income statement. That's number 3. And what was a little bit tricky, what was a little bit unique was figuring out that units sold and then using that to multiply it by the 800 to get that sales figure. And then we also had to do work on the side to get that cost of goods sold of 745,000. But after you get all that, the rest is pretty smooth.